This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone. This is AJ Monty, Chief Market Strategist with the Market Guys, and I'd like to welcome each and every one of you, especially the new folks who are joining us for the first time from TradeStation. We did a special option boot camp for the TradeStation customers last week, and we invited them to attend tonight's web seminar so that they can get a full-blown test or taste for the Market Guys and what we do here. A special shout out to Tom Murphy, who called our office about a half hour ago. Yvonne told me that Tom sounded almost a little panicked that he couldn't find the link. So Tom, thank you for joining us, and welcome again to all others who are joining us for the first time. This is really a very fun time for me because imagine, I sit in front of my computer and I analyze stocks and I do my reports and I put out the trade alerts to our subscribers, and it's really the interaction, the personal interaction with our clients and with the audience that really gets me most excited, because this is really where the rubber hits the road. This is where we show people how to make money by reading charts. And at first, of course, if you're looking at charts for the first time, it's not really that easy, because you have to learn what the signals are, and you have to interpret what you're seeing, and you have to pull yourself away from the noise and the manipulation and everything that else that goes along with money and trading the stock market, and you have to focus on what the charts are telling you. And if you could learn how to develop your skills with regard to technical analysis, I promise you, you will be able to forecast the market. I just want to go through, before I go into the actual background of the markets and do the recap, I want to show you something, an NFLX. And this goes to my point of market manipulation. Now, last week, you can see right here, let me zoom in just a little bit. Let me move this out of the way here and zoom in for you. Right here, which was October 18th, the company came out with positive news where they highlighted an analyst who raised their price target for Netflix. And boy, look what happened. It jumped up, $17 in one day, and all the investors are happy. And the next day, as the news filtered into the market, it continued to go up. And you can see here at the very bottom how over time, each and every day, as the market went higher, again, after that analyst report, the volume was dropping. Now, before I get to today's signal and what it means for Netflix, I want to show you something that was it was news that was brushed under the rug when Netflix came out on that very same day. And this report came out on the 18th of October. This is the same day. Look at the date up here. You see this? October 18th. And this is really horrendous news for the stock. And right there, the subtitle says, Netflix goal of reaching every country on earth has run into a regulatory buzzsaw in China, where now 1.4 billion potential customers could very well be lost for Netflix, mainly because the regulatory environment for that country is almost impossible to navigate. And I've been to China many, many times over the years. If you don't get in with the right people, if you don't get in with the Chinese central government, you're just not going to do business there. So this fell through for Netflix, and this is devastating news. Now, go back to what happened here. I call this manipulation. Because how is it that an analyst come out and raise a price target for Netflix after they've just taken a devastating loss on the same day with 1.4 billion customers potentially lost here? How does the stock go up? This is manipulation, folks. And again, this is my opinion. And I would absolutely go on the airwaves and tell it the same way as I'm telling you that this is manipulation. Now, what happens is a knee-jerk reaction to the positive news from the analyst, as investors are completely muted to what happened the very same day, because they kept pushing. If you go back to the news of the price target being raised, that was the one that kept getting highlighted over and over again. And who knows who was paid off or who wasn't paid off. I don't know. I'm not going to go that deep into this, but this was pure manipulation. Now, let's go and back up a little bit so you can see where we are relative to the stock. Now, back here in December of last year, we hit a resistance high, and we're approaching that resistance high. Now, for those of you, again, keeping this number up here right around 132, keeping that in mind as I zoom back in, who of our followers who've been following along with the market guys can tell me what this signal is right there? What does this candle represent? What is it called, number one, and what is it a sign of? Okay, Larry was first to answer, and that Larry is absolutely right. Ann, you're right. Jerry, you're right. This is called a doji. And Mike also entered a comment there. He said uncertainty. That's what a doji does. It's a sign of uncertainty, and it basically is when the stock opens and closes pretty much at the same price. So there was no winners this day. The buyers were not able to pull it higher. The sellers were not able to push it lower, and it just kind of stalled. Now, if you go back and look at other times here, see back here, other times where you see dojis, dojis usually show up, dojis and very small-bodied candles, here's one here, they usually show up at pivot points. This, again, very small body, very close to a doji, came right before a major sell-off in the stock. So if you're looking at this right now on this chart and you happen to be long the stock, what is this doji telling you? Well, you might want to take some profits. Now, what I'm going to do is I'm going to forecast what I think Netflix is going to do over the next couple of weeks. I think that's going to happen. I think the stock is going to pull back, and this long series of green candles is eventually here going to be met by some red candles. So the upticks in green volume driven by positive, possibly manipulative news, but look at the volume as it's dropping. The drop in volume is the leading indicator that we look for that tells us the buyers are running out of their momentum. And the doji is the signal that we all look for, signaling a potential pullback or pivot point. So the odds are greatly in our favor now that the stock will pull back. And that's how we use technical analysis as a forecasting tool. Now, for years, I would always describe technical analysis as a risk management tool. But then I started tracking the percentage of accuracy year after year. And again, I said this last week and I'll say it again, not to brag, it's almost a challenge. I want to find other people who are having similar results. We're currently tracking 92.3% accuracy in the forecast. And for anyone who looked at the markets, the market report that I put out last week, already we have 100% accuracy. Let me show you. These are the numbers or the lines that I drew last Friday. Here is Friday's trading day. At the close on Friday at 4 o'clock, I start recording. And when I record, I draw lines. And I leave those lines in place until the next report. So I will leave these lines in place until next Friday, which of course is when I do the next market report. And what I said, again, for those of you who listen to the recording, that's my evidence. Each and every week I leave evidence. I said that we would move up with the possibility of moving up to fill this small gap, which is why I drew that horizontal line there. And this would be my price target by the end of the week. Look what's happened already. Again, first day of the week, the market is up. Yeah, that's a red candle, but we closed over that blue line, which is the 20-period moving average. So there's a good chance we'll continue to go higher just a little bit. And this little hash mark here, this tick, is I think will pull back towards the end of the week. Now, the great thing that happened that will only enhance my forecast is that today we gapped up. So if this gap fills, again, the rule of trading is after a gap fills, there's a 80% chance it'll reverse. So I think this gap will fill, it'll reverse, and it'll come right back down to fill this gap. So it's still too early for me to forecast what I think will happen next week because we're still in this week. But there's a good chance that once we go up, hit our target numbers, that we can come right back down and fill that gap. Again, that's for the diamonds. Now look at the Russell 2000, which is a more broad-based index. What did I say? Again, these are the lines that I drew from last week. There we go. I drew this line. Look at this. Today, we've already hit my price target, today alone. Now, the high right there is the top of that line, the vertical line that we call the shadow. Now, again, for those who are brand new to the market, guys, I want you to understand how and why I'm drawing these lines and where the price targets actually are. When I draw a diagonal line like I did here, signaling that we would move higher, the end of the line is my target. So if you look at that little box there, see it starts at 12:15:24. That's the beginning of the line down here, but it ends at 12:31.1. And again, today we hit that already. So that's a Russell 2000. If you look at the spiders, ticker symbol SPY. Again, I'll zoom in so you can see. Look, already, there it is. End of my target, right there. See where it says end 215.09. We hit that today and went a little bit higher. Now, again, I still think we could go higher to fill this gap, but my targets are being hit 100%. Now, finally, before I get into your stocks, because I get excited about this because I want all of you to be able to do this. And again, the reason why I constantly put my record out there, again, quoting the 92.3% accuracy, I want to know who else is out there that has these kinds of numbers. Not necessarily in a competitive way, but I want to find the other people who are as accurate or maybe even more accurate than me, because if we put our heads together, if we get our ideas together and we collaborate, we basically become unstoppable in the markets. There's no one that's going to beat these numbers. And you know as well as I do that when you turn on the financial news networks, you always got the talking heads out there talking about, oh, well, this is what we think of this stock, and they give you the whole fundamental story on why they love the stock and the CEO and everything else. And then guess what? The stock goes the other way, and you're left holding the bag because you listen to them and you put your money in the direction of their opinion. I say leave the opinions out. Don't take anyone's opinion. Look at the charts. Look at the evidence. Look at what the volume is telling you, because this is a clear signal of what's happening. Again, this is the VIX. These lines are the forecast that I put out. Again, this is last Friday, and I said we would go lower on the VIX to test this support level. Look what's happening already. It's following this line perfectly. Once this area right here is reached, my forecast continues for the VIX, unlike the other stocks where I ended my forecast. I think that once the VIX hits this support level down here, it will reverse and start to go up. Now, again, let me show you the evidence in how I'm reading this so that you could, again, take good notes and practice these signals. You don't need to put money at risk to hone in on these skills. Each and every one of you can count along with me. How many red candles do we have so far? 1, 2, 3, 4, 5, 6, 7, 8. There's 8 red candles already. What's the chances of a green candle showing up real soon? High, very high, because the VIX is not a stock. It's an oscillating indicator. That's number one. Number two, why do you think I drew this line in this direction towards this horizontal number? Who can answer that? Again, who can tell me why I drew my line up in this direction and I drew this horizontal line up here? Who wants to answer? Let's see. Nathan, you're right. Robert, you're right. Stuart, Mike, Larry, all of you, you're right. There's not one person that's wrong. Sherry, Gloria, yeah. Because this gap is a target. Now, for the VIX, please understand this, folks. I've been doing this for 34 years. In my 34 years of monitoring the VIX, tracking it, charting it, plotting it, because remember, when I first started in 1982, we didn't have charts. We didn't have computers that could do this. We did it by hand. And I've been tracking since 1982. Never in my career has the VIX left an open gap. What does that mean? In my career and all the data that I've collected in 34 years, gaps have filled 100% of the time. This is powerful, powerful stuff. Powerful. Because if there's a 100% chance, and I actually have to leave room for error, I have to say 99.99% chance that that's going to fill. What that means is when the gap fills, in order for it to fill, the VIX has to go up. Now, folks, who's following the VIX and who can tell me what that would do to the S&P if the VIX goes up? Who wants to be the first one to answer that? Okay. Yeah, Nathan, Amelia, yeah, Sal? Yeah, Sal put the word inverse in the Q&A box because the VIX is inversely related to the S&P. So if the VIX is got a 99.99% chance of filling the gap, that means that the S&P has a 99.99% chance of dropping, right? So I still think the VIX is going to go a little bit lower. Let's go back to the S&P so you can see how this correlates. Remember, I said that the VIX is going to go a little bit lower first. Well, what does that mean for the S&P? It could go a little bit higher. It could fill that gap, and then, boom, watch out below. So, again, this is a leading indicator. Everything that I'm showing you are leading indicators. So if you are long the S&P or any stock that's traded within the S&P 500, listen, you got to be really defensive here because I don't know what's going to happen in this election. Listen, we all have different political opinions and things, but so did the people in the UK. All the polls were showing that the votes were leaning towards staying united in the European Union. And look what happened. It shocked the markets. So here we are, what are we, 16 days or so, 2 weeks away from the general elections here. We might get the shock in the market that might jolt us. But guess what's happening, though? The technical signals could care less if Trump gets in or Hillary Clinton gets in. The market here, and I'm talking about the technical charts, the candle charts, have no opinion. See, what we're able to do before the election is we're able to read where the money is going. And I guarantee you, Goldman Sachs knows something we don't. And again, this is what I'm talking about. If Goldman Sachs has insight as to what's going on, Goldman Sachs will either put more money in to major markets or they'll start bailing out. And you'll see this before the election announcements are made. You'll see it on the charts happening. So that'll give you some lead time to protect yourself, number one, because we've got to protect our money first. But number two, it's going to give us a make a lot of money. See, if I go back and look at the diamonds, for instance, on a longer time frame, let's go 20 years here. Okay, this is a 20-year chart of the Dow. We haven't had a major pullback, a correction, since 2009. We've been in an upward trend here since 2009. It's called the trading channel. Look, this is a textbook trading channel. Two lines running parallel. One is support, the other one is showing resistance. But we have not seen a major correction. So my opinion, again, I just told you to keep the opinion out, but my opinion is not based on my personal opinion. It's based on my professional read on the charts, is that if you look at the volume, see, this is the key, and it works on a minute-by-minute chart, it works on a daily chart, it works on a weekly chart, it certainly works on a monthly chart. If you look at this upward major bull market that we've had since 2009, what's happening to the volume? Folks, look at that. Come on, I'm helping the newest people first by asking the seasoned traders the question, what does the drop in volume tell us when a stock is going higher? Or if a general market is going higher and the volume is drying up? What does that mean? What does that tell us? Is that bullish or bearish? Who wants to answer that? Go right ahead, type it in, and I'll highlight you again. Ed says the buyers are getting tired. You're actually right. Amalia says that divergence is bearish. You're right. Mike says lack of enthusiasm. Robert says bearish. Ed, all of you are bearish. Yeah, see, the leading indicator is volume, because that tells us what the buyers are doing with their money, in what direction they're putting their money, and it measures the force behind the move. So if we're measuring a lack of force, a lack of money coming into the market at this point, see, if money was coming into the market at the highs, the price would be going up on higher volume, but it's not. So this is extremely bearish. So if you're looking at the diamonds, watch out below 17,000. Now, look, we still have a ways to go before we break down below 17,000, because remember, the diamonds are 1/100th of the Dow. So a breakdown below that trend line is 170, which translates to be 17,000, which, we're only talking 1,100 points here. And you get two weeks or less of downward moves, and that trend line is breaking. So each and every one of you should be writing that number down, 17,000 for the Dow. If it breaks down below that, this thing's going down big and hard and fast, and that's how we make money. See, there's no need to panic over that, because for the option traders, you can put spreads on, you can sell credit call spreads. For the people who don't trade options, you can buy inversely related ETFs, you can go into gold, you can go into a lot of different things, and there's a way that you could make money doing this, because you're reading the charts. Okay, one last stock I want to talk about before I go into your stocks is RGR. I started off looking at that because I think it was the last open house that I made comments on this. Let me see, is it RGR? No, maybe it wasn't RGR. What was it? It was it wasn't RGR. It was the U.S. dollar. I'm sorry. I was talking about the U.S. dollar, and what I did is I drew. I don't know if any of you remember this when I did this last week, but a lot of times when you give me your stock, or if we talk about a stock on the open house, I don't have time really to erase the lines, so I leave them. And this particular platform, although it's not a TradeStation platform, it will save the lines the way I drew them until I erase them. So last open house, what I did is I drew this triangle pattern, and we were talking about UUP, which is the U.S. dollar. It's the bullish fund for the U.S. dollar, and I said if we break over the upper line in the triangle, then we will move higher, because a triangle pattern is also very reliable. Learn how to draw triangles. I have videos that my partner and I put on our library. So go to themarketguys.com and review. I think it's a 7-minute video on triangle patterns, triangles and wedges. Go over that, because if you can learn how to identify where the triangles are, you'll notice that when it breaks above a triangle line or below a triangle line, the stock will generally continue in about a 45-degree angle. That's actually how it works, in degrees of angle. And look what happened. All this price action here that you're seeing did not exist when we were drawing this triangle line. It wasn't there, because in fact it was right back here that we were. It was like the 3rd week of September, right before right after options expiration, that I drew this line and I said we were going to break out. And look at that, there was my target. Now, why do you think I ended my line there on my target? Well, if you look to the left, that's right where the resistance line was. So I ended my line there. Not only did we hit that exactly on October 10th, but we kept going. Now, again, I want to play this out for you like it's a movie going fast forward. Look, as I zoom in, there's still a lot of people feeling pretty bullish about the US dollar, don't they? There's even talk of more Fed talk today that they might leave interest rates alone. One of the bank presidents came out there and said the Fed might just leave interest rates lower. Well, that's not bullish for the dollar. So there's some negative news starting to creep in. And look what happened yesterday. Boom. Right there. What's that called again? Doji. A doji. Doji occurred. It gapped up. So we have an open gap here. 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 And a very minor open gap down here. The alternative UUP is UDN. So if you would rather not short the dollar, what you can do is buy something that works inversely to the dollar, which is UDN. Now, UDN is filling a gap here. It's very, very close to filling a gap down here. Actually, let me erase all lines to make this very clear. Clear this out. I'll draw a horizontal line right at the gap fill point, which would be right there. Okay? And so now here is a choice. We had a question that came up from a new subscriber that Bill said, we're new to the Oracle. We took an SLV position. Is there any other existing positions that we can participate in? This is one of those. Now, UDN is, in my opinion, based on what we're seeing on the technical charts, a screaming buy at 2130. A couple of reasons. Not only is it approaching a gap fill, and not only because there's gaps above the market, but the rubber band effect, which I talk about all the time, is being stretched. Imagine, again, one end of the rubber band connected to that blue line, which is the 20-period moving average. The other end of the rubber band connected to the price of the stock. You'll see that the price of UDN does not like to be this far away from that moving average. It does not like it. You can see back in the past it's been stretched, but it does not like staying above or below the moving average at any great distances. So this rubber band is being stretched. The volume is dropping. Can you see that? Now that's opposite of what we talked about in some of the other stocks, because this one's going down. If prices are going down and the volume is going down, that tells us that the sellers are losing momentum. And when the sellers lose momentum, that's exactly what the buyers are looking for. See, before the smart money comes in to buy, they wait for the sellers to stop selling. And they know exactly when the sellers have stopped selling because they too watch the volume. So now you are on the same level, same plane as these professional traders, because you know how to read volume and price and how the price volume or the price divergence from the moving average works. There you go. Okay, I have some notes here. I just want to make sure I'm covering all points before we get into your into your stocks. Okay, it looks like I covered all my points. Okay, here's the part for the new folks. Oh, look at Ron. He's a okay. He's a veteran here. If you want me to analyze any of your stocks in the same way I've just done for the major indices and some of the currencies here, I would type them in now. I'll tell you when to stop because I don't want anyone to have it scroll off the page. Okay. All right. So let's hold off. All right. Don't type any more and then I'll prompt you again to type more. We have a good number that just typed in. We have a lot of people on this call, so bear with me. All right. Ron came up with EDIT. EDIT. Now, when you're putting in your stock symbol, please let me know what your intentions are, okay? Because then I could better help you with the positioning. Now, remember, Ron, you do not own this. That's what you just said, and you're asking me if this is a good entry point. Remember what I just said about the major markets. Because before you buy any individual stock, whether it be traded on the NASDAQ, the Dow, Russell 2000, or any other index, S&P 500, whatever, you have to look at the major markets, because if the major markets are about to shift to the downside, you might want to abandon your buy ideas. That's just a good idea because you'll have the domino effect. So I will still analyze your stock, but from what I'm seeing right here, the only good thing that you have going is that the volume is increasing as it's going up. However, look at where the stock is. Right there is resistance. Right here is secondary resistance. And number 3, you have 1, 2, 3, 4. You have 5 green candles in a row. And if you look at the history of this stock, you'll see that all year long there has not been, except for maybe one time, 5 candles in a row back here. This was 4. 1, 2, 3, 4 before it turned lower. Here was 1, 2, 3, 4, 5, 6, 7, and then it kept going higher. This to me was probably driven by pretty impressive news, but then eventually fell back and came right back to the starting point down here. So this one tells me that it's overextended. Now here's what I'm going to forecast. Because there's 5 green candles in a row, I'm going to forecast first a drop in volume. You might even see that as soon as tomorrow. When the volume drops, the buyers are starting to slow down. The sellers are thinking about selling. So what I think is going to happen here, I think the stock is going to do this for the short term. So, Ron, your entry point will not be anywhere near $16. What you're looking for is you're looking for the bounce off of the 20-period moving average. So what I would say you should do here is, remember, as the candles advance, so will this moving average. So the moving average is going to start to turn up here because the price is drawing it up. But as soon as that price bounces off of that 20-period moving average, that's when I would think about buying it. And then I would put a stop right below the 20-period moving average. Because we know that when the stock starts breaking down, look to the top left over here, when the stock starts breaking down below that moving average, the buyers hate it. They don't want to be anywhere near it when it's down below. So wait for the bounce off of the moving average. If you get the green light to do that, go ahead, but immediately put your stop below the moving average. I still am in favor of looking for something that's a little bit more bullish or inversely related to the major markets. This is a medicine company, so you got to be really careful. I'm saying if you're going to get in and be defensive. Now Sean is next in line here. CERS. Now, Sean tells me he's long at 5.10 and appears to have support around $5. Now, I would agree with that one, Sean. I would absolutely agree because there is pretty strong support actually right around the $5 level. Now, let me just give you all a lesson on the $5 line, the $5 mark. And of course, Sean, you have to take more stringent notes than anybody. Number one, let's look at this. $5 is a support level. We have a bullish engulfing pattern that occurred on Thursday, but it didn't work out that way. So we're still waiting for that bullish engulfing pattern to pan out. The good news is the price has been dropping over the past 3 to 4 days, and the volume has also been dropping. That's bullish. Okay, so you have bullish point number one. We're kind of going through a checklist here. Second point is that the stock is stretched from the moving average. So the rubber band effect will also have a positive effect on the stock. So point number two, that is bullish. Point number three is support. So as long as it stays over $5, you got support. The only thing that you need to be concerned about is a close below 5. And here's why. If you're like many other people who have a margin account and you've margined a stock that's over $5, they'll ask for whatever the margin requirement is. However, if a stock, any stock that trades in the U.S. markets, if it drops below $5, what happens is there's a change in the margin requirement. See, the brokers now look at that as a higher risk stock because below $5, a lot of the institutions support it. And some mutual funds, actually, they're going to exit by prospectus because they have to manage risk. But the main thing is the margin requirement changes below $5. So what will happen, and you'll see this, Sean, if you keep this below $5, your broker is going to ask you one of two things. You got a margin call here. You have two choices. Either sell it or bring in more money to hold it. And what happens is most people don't want to hold on to a losing stock or bring in more money for a losing position. So the majority of investors will sell it, and that in turn pushes it well below $5. Many times when a stock drops below $5, it goes right to 4. Yeah, that's a 20% drop, and if you're willing to suffer that loss, then that's your decision. But I would say make sure you're out of it on a close below $5, because as soon as it closes at $4.99, the very next day it's going to start to get hit on, and that's what happens. So that's my forecast for that. But I do think is if it stays over 5, I think you got a good chance of this at least going up to 5.5. At that point, I'm telling you, Sean, I would take a 10% profit on this. If you bought it at 5.10, you could sell it at 5.60. Get out, man. That's, who's making 10% in a short period of time on a stock like this? So I would take the profits and run, and then my next entry point would be a close over the 20-period moving average, and I would wait for that before getting back in. Okay, I'll speed this up a little bit. Ed, if you could please tell me what your idea is on CSTM as I'm typing it in. If you could tell me if you're long it or you're thinking about buying it, that would be a better help for me helping you. Okay, you're looking for an entry point. Okay. Did I lose my connection again? No, I hope not. Let's see. CTSM, Cactus Media. Well, that's not working there. Let's see if I can make sure I got chart connection. All right, now DIA came up. Why isn't CSTM? CSTM. Okay, that's why I had the wrong symbol. All right, so CSTM. You're looking for an entry point. Again, very close to the $5 mark, so you got to be careful. There is support at $5 right here, but look back here. Look what happened. Remember what I said? Here, this low right here, that low on that day, which was January 28th of this year, the low was 538. Right here, let's see what that, right there, the low is 492 on this day. Look at that. It closed below the $5 mark, and what did I say before? Stock closes below 5, margin requirement changes, it'll go right to 4. This one went right to 4. Boom. From 5 to 4, dropped 20%. Same thing happened again back here. Look, see, it was trying to hold levels. It went back up over 5, but then closed right below 5 again. Went from 5, boom, right back down to 4 again. So you too have to watch out on this. This is very similar to what we just saw in the last stock that we looked at. I would be, with CERS, I would watch. It's very similar to CERS, what Sean had. So you got support right there at 5. The good news is the volume is dropping. Let me zoom in for you because we just got a good look at it. The volume is dropping, not dramatically dropping, but there's certainly not a lot of shares being traded in this one either. So you got to watch liquidity. But we got 4 red candles in a row. Good chance a green one's going to show up soon. I think this one could actually rally. So if you're looking for an entry point, I would get in on a doji on this one, or a bullish engulfing pattern or something like that. And I too would only look to make 50 cents to 80 cents on this one and then get out. Main reason I would get out is because it's still trading below the 20-period moving average and flirting with that $5 mark with the margin requirement change. So this is not one you would want to mess around with because, what happens is a lot of times people trade the cheaper stocks because mentally they think, oh, what can I lose? $5. Yeah, but in cheap stocks, you can't think that way. You have to think in percentages. So you have to say, well, if I buy it at 5.5 and it drops to 4.5, what can I lose really? Well, you lose 20%, 25% you could lose. That's a big percentage that's hard to make up. So you have to be very, very careful with these cheap stocks because they fool you into this false sense of security that could actually get you in trouble. And listen, my goal is to have lots of money. You stick with the market, guys, you're going to learn ways to make money by removing your emotion and putting it all into the chart read. Okay? So hopefully that helped you, Ed. All right, let's go to Mike, and then it looks like we have some more stocks coming in. I see. I'm going to just take these one at a time. Mike, KMI. Remember, this platform here only takes U.S. stocks. So if you have any, I know there's some Canadians on with us. So if you can keep it to the U.S. stocks, that would be great. Okay, Mike, if you could tell me what your idea is on this one, because KMI. All right, you have a position. And what is that? So, and you're underwater. Is it too painful for you to tell me how far underwater? Because chances are you've had this for more than a year or two, I'm thinking, because it's been in an upward trend since the beginning of this year. So hopefully it's not too bad for you. Let's see, Mike, too painful. Ouch. Okay, let me give Mike some good news so we can at least sleep tonight. Hey, Mike, guess what? The stock closed over the 20-period moving average today. That's good. Here's my forecast. Boom, just like that. I think it could go up to 23, but be careful. If you're really underwater on this one, do not try to get back to break even. What I would say is that this stock will most likely rally. Because this is Kinder Morgan, by the way. This will most likely rally to resistance, and then the rubber band is going to be stretched here. So it's better to get out and find another very positive stock to make your money back in something like this than to hold on and not have this stock perform for years and years. See, chances are, and I'm guessing here, because you're not disclosing, chances are you're in somewhere up in this general vicinity, between 38 and 44. And if that's the case, I would not suggest you try to hold it until it gets back up to that point, because this one could very well go right back down to $12. So I would look for an exit point right off the loss. You can carry those losses forward. Get with your accountant to learn how to do that. You can carry losses forward and then look for another stock that looks a lot more promising so that you get this thorn out of your side already and get back into something positive that makes you feel better. And then you'll see that your whole attitude will change the performance, believe it or not, because you're making better decisions. All right, now, Darius is asking about PCLN. This is a high-flying stock right here, folks. For the option traders, who have traded this, we have a position. We have a short call position in this one. So we are bearish in PCLN, bearish. I'm going to erase these lines because I was using these for the equity, for the options expiration alert. And let me analyze this for you. PCLN, this is really an option candidate because it's a high price stock. Most people are not going to trade a $1,400, $1,500 stock. But all signs are looking pretty bearish for PCLN. We had a drop in the volume today with a significant red candle. Resistance is up here around 15 or so. Support down here 1430 with a gap right here. I'm going to highlight the gap. My forecast for PCLN is going to be this. I think we'll see that, a bounce, and just like that. I'm going to go so far to put 3 legs on there. That's what I think PCLN will do. So again, for the option traders out there, this is still a bearish candidate. You could sell calls. You could do put spreads, be long calendar put spreads, and I think you can make a lot of money with this one. Okay, I'm going to go right to Anthony. He's my namesake here. By the way, AJ stands for Anthony Joseph. Okay, Anthony, so we got something in common there. Anthony says he's long BP, this is British Petroleum, at from 28 to 30, and your short call spreads 36 to 39. Okay, this is looking very, very bearish, and let me show you why I say very, very. This gap has filled, very minor gap, and you see the price reversal here. But what you have is an inverted hammer. See that long shadow? I'll zoom in a little bit. This, again, if I'm using foreign terms, again, for the new attendees, these are all things that you'll learn with the market guys. You'll eventually learn the jargon, you'll learn the symbols, you'll learn the different signals that the charts come about. But this is looking very bearish right now, because this red candle, what this shows here is that the stock has not been below the 20-period moving average in a long time. But the sellers tried hard to push it down there and almost closed it down there. But the red candle showing up on higher volume, it's very slight, but it's still higher. See that? The higher volume is telling us that the sellers are moving in. Remember what I said about volume. Volume is the indicator that we look for that shows the momentum behind the move. So if the volume is going up on a red candle, that's bearish. So here's my forecast for BP. I'm going to go so far to say here. Anyone know why I ended my line right there? Can anyone tell me? Who wants to take a guess if you don't know? Let's see, right there, I ended my line. Why is that? Anyone tell me? Go, go, go. There's a little bit of a delay right there. Okay, support. Yes, exactly. It's actually, there's my support level. That's why I ended my line there. See, my mind's eye already zoomed in on that low, so I ended my diagonal line at that point because I'm already looking at that. So I think BP could get right back down to the $35 level, and if it breaks down, then my next support is going to be around 33. You know, you have to look at BP alongside with some of the other stocks like OIH, which I've been following quite actively. OIH is at a major resistance up here. It didn't pull back like we thought it would back here on whatever day we did that. That was October 6th that we did that. So already saw it did not pull back then, but it certainly is back to the 20-period moving average right now. But it's at a resistance point, and there's a good chance that BP will come back down to fill this gap here. Sorry, I said BP, but OIH. So BP falls in the category. If OIH starts coming down, BP will fall in sympathy to that. So that's, again, important to remember. Okay, so let's, I'm trying to get as many as I can here in the minutes that we have left. Gloria is looking at IDTI. Gloria, if you could tell me what your intentions are, or if you have a position, let's take a look at that. This is integrated device technology. I'm talking at a faster pace to try to squeeze it in. Let's see, Gloria, are you taking a position? Are you looking for a new position? You got to be careful with this one because, again, this is one, you're looking for an entry point. Okay, you got to be careful with this one, mainly because there is, it left a gap today. And so the most that I could hope for on this is a rally up to the 20-period moving average, and I think what's going to happen, it's going to come right back down to fill that gap. So I don't see a long-term opportunity here because you're fighting against the current. Remember what we said in the very beginning, the market's overall looking bearish. So if you're looking for an entry point in a long position, you could lose some money on this one. You know, we had one person ask about SLV. SLV is silver. Silver, this is my forecast for silver. Even though this is a red candle today, we had a doji yesterday, and the doji not that far off from last week. These dojis combined with these long shadows tell me that silver could go up. Now, silver and gold and NUGT and JNUG, these are all stocks that are in the precious metals markets that could actually go up as the rest of the market goes down. So I would, again, suggest if you're shopping for something to buy, stay with the bear funds or the ETFs that will make money or go up in value when the general market starts coming down. So again, Gloria, hopefully that helps you. GDX, Sherry is looking at GDX. That's a gold mining stock. It's a gold mining ETF. This one filled a gap. Look, this one filled a gap today. This one in particular, this one might come down a little bit, Sherry, to fill this gap. But then what I think will happen is it will rally back up. And the reason I think this one could go down is because you have a red candle on higher volume. But the gap target is not that far off. I mean, if it's trading, what is it, close, 2409? 2409. This one could drop 50, maybe 60 cents. So if you're looking for an entry point, let's see, you say you're looking to buy gold. I would wait. I would wait on this one, Sherry, and wait for that gap to fill. Get in on the next green candle and then take a ride because there's still a gap above the market here, which eventually I believe will fill as well. And if this one fills, then that means GDX is going to start trading above that 20-period moving average, which could be very, very bullish for you as well. I have to disclose this because I am actually buying the physical metals. In fact, today I got another delivery of physical silver, so I am accumulating the silver because I believe that even after the election, I think there is a lot of concern over the U.S. dollar. Remember, we looked at the almost vertical, the vertical spurt of UUP. Remember what we said about that? This one, it looks like a pullback. So when the dollar starts looking weak, the precious metals start going up. Keep an eye on what's happening with digital currency markets. I think they call it cryptocurrency, Bitcoin. And the only reason I'm telling you about this, I'm not getting involved with the currency itself, but I am an observer at this point because when I went to go buy my silver from Provident Metals online, and you can go to different dealers, you don't have to go to Provident Metals, but I noticed that a lot of their stores are now taking Bitcoin as payment, which is a digital, universal, international currency that's starting to pop up. The reason I'm not getting into the Bitcoin market to buy those currencies, I think it's if I can't remember the symbol, but you can track it on the charts. The reason I'm not buying any of these currencies is because the volatility is still way too high. And in order for a currency to be a viable currency, you have to have some stability. I mean, if you look at any third world country who's gone through hyperinflation, very rarely do people buy those currencies because it's so unstable. Bitcoin and the cryptocurrency markets are still at that stage, but I'm noticing more and more websites taking payment in these digital currencies. Now, that concerns me because it looks like people are looking to replace the US dollar. And if that happens, remember, what is that going to do to the underlying market? You have to start looking at the global events to see exactly how that's going to impact you as an investor. And with that said, what I'd like to do, for those of you who are brand new, we are putting out a very special offer for the brand new people who subscribe or who are looking to subscribe to our trade alert services. If you are interested in subscribing to the Oracle, either the Equity Oracle or Option Oracle, understand just all you have to do, because we don't do sales email or spam or anything like that. We invite people and we only respond to those who have given us permission to do so. If you are interested, we're going to put a special package together that we can send you. Yvonne from our office here will send that to you via email directly. No group messages, just individual only. So if you're interested, just put your email address in the Q&A box. I'll see that. I'll transfer that to Yvonne. We'll send you out the special offer on what we're doing. It's pretty exciting. Remember, we have a 92.3% accuracy level. Our option trades, with the exception of 2 positions that we've taken, only 2, are underwater right now, and I plan on turning those losers right now into winners. But every other position that we've closed for the past 2 years, every other one, for the past year, past 12 calendar months, every single one is a winner, with the exception of 2, which were the volatility plays that we had. Every single one except for those 2, which will eventually turn in. So if you're interested, I'll put you in there. We'll get you going with the Oracle service. People put interest, but they didn't put their email. So again, to protect your privacy, those of you who expressed interest just now but didn't put your email address, we're only going to send to those who are giving me the email address. And I give you my word, I love this. If you haven't picked up on that already, this is a real passion of mine. I love teaching people how to make money. And it's not as difficult as you think. See, the unfortunate thing is people tend to fear the things they don't understand. And if you fear the market or you don't understand, let's say, technical analysis, chances are you're not going to move forward and prosper from that. So what we do is we try to we more or less demystify what's happening here in the charts, break it down into a simple language that you can understand, and then once you get it through repetition, then you become an expert at this over time. And then you won't need to turn on the news networks to find out which stocks to buy. You'll just know which ones right off the bat. So hopefully that was that'll help you out. So again, put your email address in there. Farad, I will do this for you. I think I have 1 minute. I'm going to do a fast analysis of FCX. All right, so FCX, let's see. He wants me to analyze that real quick. I would buy it. I would buy it. This is another mining stock, but look at why I would buy this one. This is a long shadow. It's called a hammer. We got long shadows all underneath here. That's all bullish, and the volume is increasing. So tomorrow, I think this is going to break out over the 20-period moving average. FCX looks like a buy right around 10 to 10.20. I would get out at 11. Resistance right there. Take your 10% run. And Farad, that one's on me. We squeezed it in right under the wire. Thank you, everyone, for joining us. I had a great time. I hope you did, too. I hope you saw the value. I look forward to the next one, and I look forward to sending you out those most profitable trade alerts. Thank you very much. Talk to you soon. Bye-bye.
For almost 3 decades, A.J. Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep-it-super-simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is AJ Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our Trade Alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for The Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guys 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.